Kat Ltd sold a freehold factory on 31st of May 2015 for 364,000, which resulted in a chargeable gain of 12700. The factory was purchased on 1st of October 2003 for 138,600, and further capital improvements were immediately made at a cost of 23,400 during the months of purchase. Further improvements to the factory were made during the month of disposal. The relevant retail, so the RIPs are as follows. Yeah.
Okay, that's fine.
Yeah.
So what do we have so far for Kat Ltd? It's an unquoted trading company. Trading company tells us business asset disposal relief could be available, right?
Yeah.
And when we say controlling shareholder, what do we mean?
More than 50%.
1%, yeah. 51% or more.
Yeah.
Okay, so we sold a freehold factory. As soon as you see the word sold, you're thinking capital gains tax disposal. Well, here is a company, so it'll be chargeable gain at 19%. 364 chargeable gain 120.
Yeah.
Base cost, capital improvements, and they've given the RPI. So let's continue.
Kat Ltd is unsure how to reinvest the proceeds from the sale of the factory. The company is considering either purchasing a freehold warehouse for 272,000 or acquiring a leasehold office building of a 40-year lease for a premium of 370,000. If either reinvestment is made, it will take place on 30th of September 2016. All of the above buildings have been or will be used for purposes of Kat Ltd's trade.
What are your thoughts? What do we have here? What are they trying to question us on? I think a lot of the times, if you'd realize what they're trying to question you on, it becomes straightforward.
Is it rollover relief?
Correct, rollover relief. Excellent. Yep.
Yeah. Yeah. So I think I need to calculate the gain and then make sure that all of that's being reinvested in the new place, and then that's when you can roll it over, and then anything that's left not being.
And they're considering either one of two purchases: a freehold warehouse, or a 40-year lease.
That's a
Can you tell me anything about that? Exactly. So what's the difference in tax implication? If they purchase the freehold warehouse.
Oh, there was that rule. The 3 rules is like 30 years or less, then it activates.
60 years or less. Yeah. So basically, so if it's a freehold warehouse, which is for 272,000, you defer the gain into the base cost of the new asset. But if it's a depreciating asset, which has a useful life of 60 years or less,
the earliest,
then the gain freezes and crystallizes on the earliest of 3 events, which are,
was it 10 years
sold? Yeah, 10 years, assets sold, and assets ceasing to be used in trade.
Okay. Yeah.
So generally speaking, what would the advice be?
Is that the life of 10 years? Is it?
Yeah, as in just 10 years from the date you purchase, it'll crystallize.
Okay. 10 years after purchase. Okay.
Yeah. After 10 years, that gain that was frozen will come back into charge.
Okay.
Now, which one would be better, generally speaking, for tax purposes?
The first one.
Why?
Because it doesn't have any it doesn't have any conditions where, like, for example, in 10 years you definitely be charged with the other one, whereas in this one you can hold it forever.
Exactly, until the next freehold is disposed of, which can be maybe after your whole life. That gain is deferred, but the other one crystallizes definitely after 10 years. No matter what, that gain will come into charge. When I say crystallize, comes back into charge after 10 years. Okay, let's continue. What about Kitten, who is the controlling shareholder?
Kitten sold 20,000 £1 ordinary shares to Kat Ltd on 5th of October 2015, which resulted in a chargeable gain of 142,200. This disposal qualified for entrepreneurs relief. Kitten had originally subscribed for 90,000 shares in Kat Ltd on 7th of July 2008 at their par value. On 22nd September 2011, Kat made a 2-for-3 rights issue. Kitten took up her allocation under the rights issue in full, paying £6.40 for each new share. Kitten also... Yeah.
What do we have, please? Explain.
So Kitten is owned by Kat Ltd.
Kat Ltd is owned by Kitten. The shares in Kat Ltd are owned by Kitten.
Oh, sorry. Yeah. Yeah.
Kitten is a person, is an individual
that
owns the shares in the company.
Yeah.
So he or she, is it he or she? No idea.
Kitten
she
took up
probably,
her allocation. Yeah.
Yeah, exactly. So sold 20,000 shares. Disposal, as soon as you see the word sold, you're thinking capital gains tax disposal, and they've given us the chargeable gain. Qualified for entrepreneurs relief. What does that tell us? That tells us that the conditions have been met, which are hold more than 5%, must be an officer or direct officer or employee of the company, and shares must have been held for more than 2 years, and officer or employee for more than 2 years. Originally subscribed for 90,000 shares, so that's base cost, par value. And then we have a rights issue 2-for-3, paying £6.40 for each new share. So it's the whole share pool that you probably have to look at.
Okay.
Continue.
Kitten also sold an antique vase on 16 January 2016, which resulted in a chargeable gain of 27,900. For the tax year 15-16, Kitten had taxable income of 12,000.
Okay. So what do we have there?
27,900.
What that tells me is that gain.
Oh, so it's a basic rate. So I think I need to open up the tables.
Yeah, just use Aya's rates, 37,500 and things like that. But yeah, effectively, what that tells me is she's made two gains. One that qualifies for entrepreneurs relief, one that does not. So effectively, the question it will be trying to say, where will you use your annual exemption against? So it's straightforward, but it's something that needs to be thought about in order for it to be straightforward.
Yeah.
And taxable income of £12,000. So we're trying to say that the personal allowance has been utilized.
Taxable income of 12,000.
Okay.
Yeah. So does that mean that the chargeable gain, I will deduct that annual exemption amount and then times it at the lower rate?
No, because that's what it's trying to question. Because we said that the gain relating that qualifies for entrepreneurs relief still uses up the whole basic rate band. Do you remember? So regardless, this will all be at 20%.
Okay.
But you'd use the annual exemption against you. So that's effectively the full thing they were trying to question was, do you think that some of that will still be taxed at 10%? The answer is no, because this is treated as being using up the basic rate band in full.
Okay.
And then the balance, the 27,900 would be at 20%. Therefore, you take off the annual exemption and then do that at 20%. So there will be a question on that. We have indexation allowance will have been deducted. So they're simply trying to tell you they're simply testing you your calculation and indexation allowance, straightforward. Rollover chargeable gain of the warehouse freehold. And then I'm guessing, so crystallise, we have the leasehold, the depreciating asset. Then we have the base cost, which is the share pool that you need for the disposal of the 20,000 out of the 90,000 shares, and the CGT liability for 15/16. That's when you're looking at the annual exemption and basic rate band, etc.
Okay.
I'll give you, let's say, 9 minutes. 9 minutes for this one, and then we'll discuss. So we have purchased in October 2003. So we have 182.6. Disposed May 2015. Which they've given us the RPIs. So it's effectively 138,600 multiplied by 258 minus 182.6 over original 182.6. And then you do the exact same for the 23,400 because it was the capital improvements were immediately made after. So you'd assume October 2003. So again, it's difference over original multiplied by cost.
Okay. I don't remember doing this in the workbook, the RPIs.
I think we definitely did. Do you remember the December 2017 when it got abolished?
Yeah, I know that part, but I remember all the questions where they just gave the indexation allowance as a figure, but I don't ever remember doing it this way.
Okay, so effectively what you need to do is difference over original. So it'll be, what you do now is 138,600. Yeah, 138,600 can be outside brackets, so no brackets for 138,600. And then multiplied by brackets, difference, which will be 258 minus 182.6 over original, which is, so you can put that in brackets and then divide by original, which is 182.6. And BODMAS will do it correctly for you. Okay, so that's for the cost. And then for the capital improvements, you do the exact same thing. So
okay, so 23,400 times 258, take away 182.6 divided by 23,400.
Original RPI 182.6.
Okay. $258 minus 182.6.
Okay.
I'm not getting exact same answer.
That's fine. That's due to the computation, but the answer will be C.
Okay. I don't remember doing this in the workbook at all.
I'll have a look. Yeah, maybe they didn't show it as in detail as if difference over original. But well, at least you know now. So I'm not sure. Can't remember as well. So.
Okay.
Next one. How did we get D? Talk me through, please.
So it was the cost of, I think it's the new place. So the new warehouse is going to be 272, and the gain deferred is 120, which is the chargeable. Actually, hold on. I just noticed that
you can't do it like that. So that's what I'm saying. Take it step by step.
Yeah,
you have to do it step by step because it's very easy to miss something else. So what we need to do?
Proceeds.
Proceeds 364. Good.
Cost, which was the 138,600.
No, and then you need to take off the
Indexation allowance.
23,400, the enhancement expenditure, and the indexation allowance. Correct. Yeah. These are all deductions, right? Indexation allowance 66,894. These are all negatives.
Yeah. So the gain is 135,106.
Okay. Okay, and then in terms of the freehold warehouse for 272,000, how much? Some of the, as you can see, some of the proceeds have not been reinvested, right?
Yeah.
So the amount not reinvested is immediately subject to capital gains tax.
And would that be so amount not reinvested?
It seems to be 364 less 272.
$92.
Okay. Now,
so then it will be 120 less than 92.
Exactly. Which is the amount of rollover relief available. So just type rollover relief. 12700 less 92.
Uh, 2700.
Yep. Okay, 28,700 is the rollover relief available. So therefore, what's the base cost?
$24,300.
Exactly. The answer is A.
Yeah. Yeah, I think so. On this one, I got stuck because I couldn't work out that. So then from the previous question, the indexation allowance.
All right, okay.
So
To be
then,
honest, you wouldn't need the previous. You wouldn't need the 135,106.
oh, is that because I
Given us
know
the
that
gain.
that times that?
Yeah,
Okay, yeah.
they've told us that 92,000 has not been reinvested. Well, obviously you'd have to work it out, but we've got the information how much has not been reinvested.
Yeah.
We've been given the gain, so we're saying the difference is available for rollover relief.
Yeah.
And that's it.
Okay, yeah, makes sense actually. Yeah. Okay, yeah.
Any questions? So really and truly, that 135,106 is not really relevant.
Yeah, yeah.
It's not really relevant.
So yeah, when it comes to rollover relief, just get the proceeds from whatever you sold, and then just if it's not exactly what you're buying, then that difference is what will then be subject to
Capital gains tax. Yeah.
capital gains tax immediately, and then the rest can be rolled over.
Agreed.
Okay. This one I said D.
Latest date by which to, yeah, so it has to be 10 years from 30 September 2016. And where did you get 30 September 2016 from, please?
So it says here, if either reinvestment is made, it will take place on 30th September 2016.
Perfect. Spot on. Good.
Yeah.
24, 90,000
Yeah,
shares. Okay.
So I got stuck.
Okay. No problem. So we need to have the share pool. So we need to have the share pool. So you just have a share pool. So you have on the left hand side, you have this some sort of description. Then you have shares, and then you have cost going across the top. So you can put somewhere there description.
Yeah.
And then shares and cost.
Okay.
So subscription, you can put subscription. We subscribed for 90,000 shares, which cost £90,000.
Yeah.
How do we know it's £90,000?
There's par value.
And what is par value?
£1. It says somewhere here.
Yeah. So that's something. Yeah, exactly. But you have to be careful with that. So generally it'll be £1, but you never know when they're trying to play around with you.
Yeah.
It could have been something else.
Yeah.
You get £10 per share. You get 50 pence.
Stuff
like that. Okay. So then, that was on 7 July 2008. So in the description, you can potentially put the dates as well. So just put 7 July 2008. The reason why I say you put the dates, it's not relevant here, but you do know about the 30-day rule, right? If you
where you deduct
acquisitions.
You deduct off the first 30 days first.
Okay, so then what do we have? We have rights issue. So description, rights issue, 2 for 3 at £6.40. And then you can chuck the date there somewhere as well. You have to make sure you say at £6.40, please. And then the date as well somewhere. Okay, so then what's your working there, please?
So it's the 90 divided by 2 times by 3.
Two shares for every 3 shares. So think about it. You get 2 shares for every 3 shares.
Oh, sorry. Okay. Equals that divided by 3 times by 2.
So you get a further 60 shares.
Mm.
And how much did they cost? At £6.40. Good. And now you can have your totals at the bottom, please. The total. Okay, yeah.
Am I including this will just be 60 shares, right? Here.
It would be 150,000. Okay, yeah, good. And then we are disposing of 20,000 shares. So you just put minus 20,000. Now this is the figure we need. What cost figure will have been used in calculating the chargeable gain? How do we work this out, please?
Is it
that if you put the lines there, so as in like that's the total, so you line it off. No, not there.
Oh, yeah.
Yeah.
Would it be
now you can ignore anything on top. You're looking at the 150 and 474.
Yeah. So would it be 20,000 divided by that times by that?
Excellent answer, negative.
Okay.
So therefore, the answer is 63,200.
Okay.
Now, if we were continuing, let's just say you made another disposal of 10,000 shares. So what do we do then? If you make another disposal of 10,000 shares, I want to know the base cost, please. No, that'd be incorrect. You can't go straight to that. You need to have total again. Yeah. Yeah. Excellent. And then, as you did before,
gonna be that.
Yeah. On the negative. Yeah. That's fine. But yeah, as you know, the answer is 63,200 B.
Yeah. Okay. Yeah. I think I just need to try and get it right or always in this format, because
yes, once you do it in this format, you'll never go wrong. And as I say, make sure you're always doing the totals. Anytime something new happens, if there's an acquisition as well, you do a new total line.
Okay. Yeah. Because in my head I was just reading it and trying to just calculate in different cells, and it's not.
And that's why presentation is important as well, so you can follow exactly what's happening.
Yeah.
Good. There will be more questions on these sort of things. So there's always so as in, for me, the main thing is when we come to a similar question again, that you sort of do this what needs to be done, and then hopefully you'll be okay.
Yeah.
So CGT liability, what do we have?
I didn't get time to do this question, but
let's discuss it together.
2015. So it'll be the 27,900 at 27,900
$27,900 minus annual exemption. But remember, we said there's the 142,200 at 10% as well.
That's 142,200. This is charge gain from bars.
No, you can't do it like this, because some of it will be taxed at 10%, some of it will be taxed at 20%. You need to have two separate columns. So what I do is one column heading will be gain qualifying for BADR, and the other heading gain not qualifying for BADR. No BADR. No. Why would you take that? Oh, are you still moving that?
Yeah, I'm trying to find the rates. Is the annual exempt amount 11,300?
12,300.
Oh, sorry, I'm looking at the the paper, the wrong one. So BADR is 10%. This is 18%.
At 18%.
Because it's a higher rate.
Yeah, but 18% and 28% is for residential property only.
Oh, yeah.
This is a VAS,
20,
so it's
20%.
10 or 20. Yes, it'd be 20%.
20%, yeah. And this will be at 10%.
Exactly. So then, yep, and then the liability. You just do a calculation. So the answer is 17,340.
Chargeable gain 142,200. The bars was 27,900. You know the income tax is 12,000. So is there still 500 left?
No, that's only to do with, that's only for income purposes. This is, we're looking at capital. So don't mix the two together.
Okay.
For income purposes, you have 12,500 personal allowance. For capital, you have 12,300 annual exemption. That's correct. I think what the issue is in 15/16.
Yeah. Oh, it was a different number. Yeah. This was, that's what I was following.
Yeah, that would have been different. Exactly.
Yeah.
That definitely
it was 11,300. The rates.
But I think that the tax rates were different as well. So
yeah.
Do they have the tax rates on the exam question?
Yeah, they do.
1828, as you can see. And the exempt amount was 11,100. It's on page 4.
Yeah, 11,100.
The bottom line is as long as you've understood what's happening, then we're fine. Let's move on.